Hey there, everyone. We are in the last day of the trading week for the U.S. stock markets. I'm going to give an update on the indices. I want to talk a little bit about TMF as well. I'll throw in some crypto. And then finally, one of the stocks that I've been watching, wait until you see the technicals on it. Dollar Tree, as a matter of fact, could be our next 20 to 30% mover over the next couple weeks here. So I'm actually pretty excited to share that with you. I'll show that later on in the video. And if you guys want to see more of my technicals, see more of my analyses, my buys and sells, along with the other panel experts with what they're trading, with what they're analyzing, what they're seeing in the markets, including stocks, cryptos, bonds, you name it, you can be a member of the community of thousands of people who are already part of our Discord. That link is down in the description. Make sure you sign up for the earner tier so you get unrestricted access to everything the Discord has to offer. Without further ado, let's get into the charts. I'll tell you more about the offers later. So coming up for you first is QQQ, tracking the NASDAQ 100. You can see the critical support area, the fact that we filled these gaps that were in here, and pay attention to these two gaps that you see because we filled them on Wednesday, April 9th, and that's actually really important to what we have for Dollar Tree coming up, and I'll talk about why I'm kind of excited about it and what it could mean for us. So when we move over to SPY, you can see we didn't quite get that top gap filled yet. I still have that label out there for us. We got close. We got darn close. I also talked about these blue 20 days coming down across the chart, said we had to get over them to remain bullish. Just couldn't do it yesterday. Jerome Powell not really helping out the markets, having it crashing down, saying that, it's going to be tough for inflation, going to be tough for the labor market. That's not great because we have four pillars to propping up markets, and I've talked about them before. I'll recap them again for you quickly. One is strong GDP, and right now that's in question. Subdued inflation. Tariffs help to put that into question. I'm just talking about what the market is currently pricing in at the moment, of course. And then we also have easy monetary policy, and the Fed's still saying we're going to hold back on this one. We're going to wait. Their meeting that we have coming up in May, by the way, maybe they sing a different tune. We're going to have to watch and see. So the last pillar that we have is the labor market, which is the other thing that Jerome Powell said, this could take us a while to reach our goal. This could disrupt that stable employment that we're looking for. So those are the four pillars: GDP, inflation, monetary policy, and labor market. We want each of those to be favorable for the markets to prop up the markets. And when those come into question, that's when we see that destabilization in the markets, any fear, uncertainty, or doubt that we have. When we start to get evidence or proof, that's when we start to hit those peak fear moments. And if you have watched my other videos, you should really go back and watch them, where I talk about the NASDAQ 100 and what it's done historically, going all the way back to October 2002's low to the peak that we had prior to the Great Recession, if you will, and then every peak that followed, and just how much we've sold off since then on a Fibonacci retracement basis. And when you look at that, it's actually pretty incredible, and it actually helped us to predict this near-term bottom that we've seen so far, and potentially what we could see coming up, depending on if we once again still just have more fears or if we have confirming evidence. And now, mind you, with that confirming evidence, when everything seems to be so certain, that's when we would start to have that contrarian play come in and we start to see a reversal come back to us. So let's get back into the charts here. There we go. So down below the 20, got rejected there, sold back off again. Thank you, Jerome Powell. Same thing for the for SPY. We sold off of that. IWM, when we go there and we look at the daily chart, you can see we have a descending broadening wedge here. And so that could be more volatility. We are still down below the 20-day, the 50-day, and also the 200-day. And if we move out to the monthly chart, and you just pay attention to what you see for this bullish channel that we're in, I say that we visit down below the green, and we also visit up above the red. We live in between the green and the red for that bull channel that you see in there. And that's 17 years in the running that we have that. So if we do happen to rip further down below the green, I wouldn't say that we're necessarily going to stay there for too long. That even when we go to the pandemic, which came down and brought us down to the 200 month, that was actually pretty impressive. And that was probably the signal that we were looking for, that things were about to bounce for us. And now that we know to look for that, and the fact that we're darn near trading below it again, I did start some dollar cost averaging down below here. So far, that's paid off. And I think it's going to continue to pay off, even if it is a more of a long-term play than a near-term one. So for IWM, I said it's going to take it a little bit rougher than what we see for the Qs and for SPY because it's small caps, not the big, more insulated companies that we would have in the other two indices that I've covered here. So moving on from that, talking about inflation, hedging, all that kind of stuff, we are just getting squeezed between the 13 and the 50 EMA right now. Still staying up above the 5, up above the 13, riding on top. That's a bullish thing. RSI staying up above 50, also bullish. once we get a candle on top this red 50 50 day that's moving down here, the exponential moving average, that's when we really start to see that power come in. We can start to see that upward movement. We haven't taken over this previous high that we have back here. Once we do, that's also a good sign. So still lower lows, lower highs, still looking kind of bearish in that way. Although if we take down the EMAs and put up the SMAs, you can see man, we're still just barely up above the 50, up above the 200 near term. That's bullish, but down below the 200 day. Got to get back up on top of that to really see that continued bullishness for what's going on right now. So we need to get some good volume, showing some high conviction in these trades for Bitcoin to keep that bullishness in the running. And I will say that I think that Bitcoin's actually holding up surprisingly well. And I'm going to keep reiterating that sentiment. All right, let's get to TMF and then we'll do Dollar Tree at the end here. So for TMF, I had a question the other day in the Discord. Why do you keep on buying with all the news that's coming out about long-term treasuries and all the trouble? And I gave my evidence for that. I based it off TLT. TMF is the triple leveraged version of that. This is based off the 20-year treasury. There's the double bottom that you see. And while there's no guarantee that we were going to stay there, we're still hitting pretty historic lows when it comes to TMF. And we start to retest those historic lows and you start to see, the news can't get any more negative on it, at least for right now, at least on the fear side of things. That's usually where that bounce comes in. So we bounced all the way down from 85 and we made it up so far to that high of 88, closing yesterday at 88.31. So not a decent little bounce there coming back for TLT. And I will say that we're not quite out of the woods yet, but I do think that we're going to have a little bit more recovery coming in for TMF, TLT, you name it. I think that we're going to have some further upward movement for that, especially if the markets keep on getting messed with during that time. There is always the fear that there's going to be further dumping of treasuries. If it's the whole basis trade taking place where we have a lot of selling, a lot of capitulating any sort of margin calls on hedge funds, for example, that end up getting liquidated, that could be some downward pressure if they're holding on to those long-term treasuries as a collateral for that, and then they have to let go of them and just have to dump them. That's going to cause more selling pressure. In my opinion, that would also cause, once we hit the bottom of that, well, we could potentially see that there could be some rapid buying coming in on top of it, putting in a whole lot more upward pressure on that overall. So moving over to Dollar Tree, what am I seeing on here? Well, first of all, there's insider buying that's been taking place, over $1 million worth of insider buying down here at these levels, right around 72.50-ish, I think was that number. And that news came out yesterday, putting in about 2% pre-market this morning, up just a little bit more. We have the 20 over the 50 days. Let me change this view for you so that you can see that. There we go. Blue 20 crossing over the 50. That's near-term bullish. Need to get more volume conviction in here for these moves. That could also help things out. That would be a very positive thing for us. So that's nice to see the fast-moving average crossing over the slower one. We're down below the 200-day, which you'll notice if I move in my technicals in red here, because that's kind of a bearish thing. Orange because the golden cross with the 50 over the 200 is questionable. If we do get it, it's bullish, but there's no confirmation of it. The 20 over the 50 is a bullish thing as well. That's why that's in green. RSI over 50, that's in green for us. And over here you can see in green, because if we do happen to fill these gaps, remember I talked all the way back here with the Qs about filling those gaps. Well, let's go back, fast forward to DLTR. If we fill these gaps, that takes us from about 73 up to about $94 per share to fill that gap. So if I click on the top of that, well, let me hit my magnet tool to make this easier for us. There we go. Click on the top of that and drag up to about where we'd find $94. That's about 25 to 30% upside to get back up to that $94 per share if we hit it. Now, mind you, Dollar Tree could be good if it's a sort of recession play, if you will. Tariffs kind of make it a little bit more complicated, because if they're buying any sort of cheap goods, if you will, that could be something that if it's coming out of China, for example, and right now tariffs are messing things up there, causing inflation to happen, that could also complicate things in terms of pressure. I will say that we do have a bit of a consolidation pattern. Click that imperfectly. Give me one moment to adjust the bottom of this. There we go. So you can see the bottoms rising up besides what we had on that quick rip down on Friday before quickly recovering with decent volume. So we do have some buying pressure coming in when we get down below $70 per share, all the way down to about $60 per share. But we also get selling pressure from about $76 to $80 per share. So really we got to get up to the bottom of this first gap is about $82. So even if we make it up to there, that's still over 10% of a climb from where we're at right now. We do have the 200 to contend with. Maybe we get that golden cross, but this could be one of those plays with that insider buying at its heels. Could be one of those signs that there's some good news coming our way. And if we go out to the monthly chart and really get a good look at this chart for where we've been, man, we were all the way up here at almost 175, just over $175 per share. Where did those bottoms, where did that support keep on coming in? That's exactly where we're at right now. And you'll notice the chop that comes in up above to about the mid 80s, if you will. So we keep on hitting that selling pressure as soon as we get to about $80, which is about close to the top of this. About mid 80s is really where we see the top of that chop. And if we can get over that, especially on strong volume, that could be where that next big move comes in. And when you look at the monthly chart, our volume is actually not so bad with these long wicks showing that overall maybe we have that buying pressure coming in a little bit stronger than we anticipated, and getting on top of this 200 month that's coming along this way, which currently sits at $76 per share, which could be why we start to see that selling pressure coming from about 76 to 80 between historic resistance and then also this moving average resistance that you have, that 76 to 80. If we can get on top of that, if we can break clear of 80 and really sit on top of that 200 month, we also see a small climb right now. That could be where that price action comes in, that we start to see that rise come back to it. If we move down to a weekly basis, the RSI is just below 50 as well. So we have the daily up above 50, the weekly very near 50, that if we can get that cross above, that can be a very good thing for us, a very bullish thing for us. And then the monthly one we have yet to really make that rise. Getting on top the 200 month would be a long-term bullish signal to see where we could start to get that price appreciation coming back into it. So let me wrap this thing up and put a bow on it for you. And then I'm going to wish you all a great weekend here. The indices, what are we looking at right now? Probably a little bit more volatility still coming their way, at least a little bit. We have earnings coming up, corporate earnings, especially for big tech. The eyeballs are really, really going to go on big tech. So we're going to be watching. I think Netflix is usually one of the first to report, and that's coming up for us, I think, on Thursday of next week. So big tech, eyes are going to laser there to see if there's any signs about the economy, any signs about continued strength for big tech, demand for NVIDIA parts and services, what is the result of the tariffs, or what they believe the impact of tariffs are going to be. Maybe not necessarily Netflix because of the whole import-export thing. They don't really ship the goods so much as provide the service of a streaming video. I don't know if tariffs are going to impact that necessarily in any sort of big way. I believe that it's more the physical goods and services being shipped around that are impacted. In any case, so we do want to watch for those corporate earnings. Those are the next near-term catalysts that we have coming up. Besides, of course, more tariff news, geopolitical tensions, things like that are things to always keep in mind as they can impact markets as we go along here. TMF, I still think that there's some strength coming its way. I think we're still near the bottom for it right now, and I still think that for me it's cause for probably some more addition to my current position for TMF, as I think that long-term treasuries still have a short-term potential to outperform, and that's why I'm going triple leverage on them. And then Dollar Tree, with the insider buying, with the fact that we've hung around, seeing the buy-in pressure that we have from about $60 to $70, and that we have just that final hump to get over from about $76 to $80, that could be that next big move that we see happening over the next month or two here. It could be a nice play for Q2 to actually add some outsized returns, if you will, especially compared to the rest of the markets. We're just going to have to watch and see. We'll watch those technicals. And guys, you should keep on coming back to this channel. If you want to see more of my analyses, more of my technicals, if you want to see them as they come live over at the Discord, you can see my buys and sells as well. You guys can also see the other panel experts as well. Like I said, we have a joint Discord together with a community of thousands of members. It's a super positive place to be, where everybody's supporting each other in that pursuit towards financial freedom and adding alpha to our portfolios. And if you guys want to learn technicals yourselves, want to learn how to trade them using the bread recipe, want to learn how to trade options as well, there's some coursework down in the description. Use code word doctor when you sign up for that. That's going to give you some massive savings. And if you bundle the Discord, my goodness, if you bundle the courses together, you also get a further discount for that bundle, and it still works with code word doctor. Guys, thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.